The latest Purchasing Managers Index PMI shows that business activity has increased significantly due to its highest level since January 2023. The headline index for April rose to 52 for the third month now running. A reading above 50 signals an improvement in business conditions compared to the previous month. The data reflects sustained improvement in the services, including in agriculture and in the construction sectors. But despite the growth, some firms in the country have remained bearish over the economy's future. Jimmy Mbogo sat down with an economist from the Stanbic Bank that produces the monthly index for more explanation.
The survey, which had 400 private sector firms participate, shows that future expectation improved slightly from March's record low, but remained among the weakest in the survey's history, with only 5% of firms remaining optimistic about their growth prospects, an issue that has forced them to divert to temporary hirings owing to uncertainty of new business. Kenyan companies have also expressed concerns over the operating environment, the cost of input, as well as uncertainty in tax policies, which they say complicate their ability to plan ahead.
We've seen, I think, over the past couple of years that policies, especially government policies, have been a bit erratic, and that constrains business planning. So I think that is some of the main drivers for why you're seeing that pessimism, as well as the fact that we've come from a period when we've gone through a series of shocks. So we had COVID, emerged out of COVID, went into there was a drought in 2022. Then we had FX liquidity pressures. So all of these shocks, I would put it, are what are contributing to why you're seeing some level of pessimism, and the fact that it seems government has not been responsive.
Despite the pessimism, new orders expanded, driven by robust gains in the service industry, agriculture and construction sectors. However, firms are reporting a shift in their orders to basic and essential commodities. The PMI report also indicates a steady return to growth at the start of the second quarter of 2025 with muted inflationary pressures.
My sense is from the corporates that we've interacted with, there's been a shift to more of buying the staples and less on necessities. So spending is mainly on what people need rather than on luxury goods. Although in some parts of the country you do see people still buying luxury goods, but it's not to the same extent as it used to be. So there is that mix where you're seeing particularly middle income and lower income households buying or focusing on just buying necessities.
And while input costs rose to a 3-month high, inflation remained below historical average, leading to an increase in new orders, which rose by 30%, while output stood at 25%, as employment rates stood at 20%. Experts also note that ongoing global shocks, such as the US trade disruption, may harm Kenyan economy and particularly the apparel sector. Jimmy Mbogo, Citizen TV.